Okay, everybody, it's 11:30, so we're going to kick this thing off. My name is Christy Thompson, and I am the marketing director here at BIS. We just wanted to say thank you so much for coming out today to talk about the BIS Business Builder webinar, Healthy Ways to Manage Your Money Through the Coronavirus. A few housekeeping items before we get started. There is a chat over here in GoToMeeting. It should be at the top or on the right, little chat bubble. So anytime throughout the presentation, feel free to pop in a question and we will answer them, do our best to answer them throughout the presentation or handle them, leave them towards the end. I'm going to go ahead and introduce Phillip Long, our CEO, and the speaker today. He is an entrepreneur and a technology expert, and he has been in this industry for 20 plus years. He is also has 600 plus clients from Gulfport to Gulf Breeze, the current owner of 5 businesses, and is a certified information systems security professional. And this certification is backed by the Department of Defense. So I'm going to pass this over to Phillip now.
All right, thank you so much, Christy, and thanks everybody for attending. I'm really excited about the topic for today. I don't like the fact where we are that we have to discuss it, but I think I've got a really great team of guys that are going to be able to help us parse this. I'm going to have really a panel today. It's going to be a little different. Usually it's just me and one other person, but in this case, I felt like bringing in some big guns was going to be good. I have 3 guests today. One is Craig Jernigan. He is the president of Heritage Financial, and he is. All these guys are really sharp, and I've kind of got to know them. They're actually doing some things for me, and I really like the holistic approach, the way that they take a deep dive into things. They're not going to just sell you a McDonald's Happy Meal for your retirement or your money management. Craig has, he's worked with a lot of things. Our company is really growing because of, I think, the unique offering they have. And then we have Edward Nelson. He is also a team member over at AHF. He's also a managing partner. He's got 30 years of experience, and Ed is really just a wealth of knowledge in all that he knows. And then, of course, Brandon Melton's joining us also, and he is a financial professional over there. And he really digs deep in trying to to help out our consumers. So welcome to the webinar, guys.
Hey, thanks for having us, Phillip. It's an honor to be with you guys today.
Yeah, well, I appreciate it. Well, I want to jump right in, and I'm gonna just kind of, we're going to need to weave through this, and kind of the topic is the coronavirus. We've seen this sweep across the country, something like we have never, ever seen, and it's affecting the market. I mean, pretty much the market has lost all of its gains since, for the past about 3 or 4 years. Last I look, I try not to look, to be honest with you, but let's talk about the impact of that. Let's kind of jump off on that topic, and then I want to ask a couple of other questions. Explain the impact of the coronavirus, really on not only the United States but our world economy.
Sure, and I'll take the first part of that. And Phillip, one of the things that I will say that we're kind of dealing with right now is obviously everything changes by the minute. The human aspect of what we're dealing with, we'd be remiss if we didn't provide some oversight there as to what we see and some of the concerns. I have many business owners that we work with, and I had a lady yesterday who I've been working with for the last 5 years, and nice lady. She owns about 4 or 5 businesses, and it's always been about conquering the world, and taking care of her people is one of the most important things to her, and she was able to do that with ease. Never was that a question. Today, with the lockdowns and all the things that are happening, she was in my office yesterday, and I didn't know if she was feeling too well. You could tell she felt the pressure for the first time ever, really. And that pressure was, how am I going to take care of my people? Our income is just about turned off, and we don't know how long that's going to last. And what does that mean? Craig, what's the solution? Of course, we offered some guidance, but the reality is that the biggest problem I think that we face right now is, what does it mean? How long are the spigots turned off for business as usual? How do we keep employees? How do we keep our businesses going? Because the reality is, when the dust clears, I think we're going to have, a pretty strong recovery. But it's that short term, where you didn't expect to be. No one on this call, no one alive today has ever seen anything quite like what's happening. So first, we want to take care of our neighbors, our families, our employees. But the businesses, from an economic perspective, the businesses need to be there when the dust clears. And I think for the next 30, 60 days, that becomes front and center. Are there investment opportunities? Of course there are. But I think that's a distant second to the human aspect of what we're dealing with, Philip. And I'll tell you, from an advice standpoint, cash is king right now. So, if you're a business owner or employee, or just want to take care of your family, you want to make sure that you have some liquidity, because you really don't know what the next 30, 60, possibly even 90 days looks like. So before we even get to investing and turning into, opportunity, this is that emergency fund that people always talk about. Do you have 30, 60, 90 days worth of emergency funds? And we all know that most Americans don't have that. I believe that the government is doing what they can to spring into action. There's a lot of things being proposed right now, but at the end of the day, it was like my lady said yesterday. She goes, "What are they going to do? They're going to give me $100,000? That's nothing. That's 2 weeks worth of payroll for me. I don't know what to do." Right? So let's be thinking about, when we think about investing, that's fantastic, but let's take care of the immediate now. Let's understand that, what's going on, where we are. When the dust clears, it's going to be a fantastic opportunity for economic recovery, but let's limit the damage now. Let's make sure that we're thinking about taking the steps necessary, to protect our families and the people around us in our communities, and the small and medium-sized businesses.
Yeah, and one of the things that I always hear, and again, I may not be the savviest investor, but kind of speaking for the average business guy, how you can really get yourself hurt in a down market. It's one thing that I've always, I truly believe that. And if you want to talk to the challenges of if you don't have cash, what do you do if you don't have that cash, that liquidity that's totally needed right now? You don't want to go hit your 401k or your some kind of a retirement plan, do you?
Hopefully, this is Ed. I'm going to jump in on this part of it. You don't want to, but you may have to. I mean, and Craig alluded to it. I mean, liquidity is king right now. So you need to do what you need to do. It is an emergency situation. 401k loans out of your whole life insurance policies, anywhere you can get liquidity to survive this. The government obviously is working pretty aggressively on ways to push liquidity into the markets. And that is really, in the foxhole mentality right now, doing everything you can in any way you can to survive. Once that has passed, again, it could be 60, could be 30, could be 90. What do you do? What's happening out there? Well, think about this. What's really going on is we have built a global economy with global supply chains. Now, depending on what particular business our listeners are in, it's going to have dramatically different effects. Our prognostication is that eventually the markets will have some clarity as to what the life cycle of the coronavirus is. At that time, you'll be able to assess the risk, and the markets will start to look at going forward, because they are forward looking. But what's really happening? You're seeing a dead stop in the global supply chain and consumer buying patterns. You're being forced to stop buying, stop delivering products, and then therefore the entire global economy has come to a screeching halt.
Yeah.
Now, depending on the type of business you have, that could be simply, like, I'll use Apple as an example. They're experiencing shortages of iPhones. Demand for iPhones has probably not dropped dramatically. Once Foxconn starts supplying more iPhones and people can get back out of their houses, that demand will be caught up. However, if you're a travel company or if you're a airline company or a cruise ship, that demand is never coming back. So
Yeah.
they're gonna be in a longer strait of being under pressure.
Yeah.
What's also the risk is, because a lot of companies, depending on where you are, this probably relates a lot more to the people on the call, depending on where your liquidity is, you can get into a situation where you literally don't have the free cash necessary to continue the business operations. And I think that's one of the good things that the government has realized since the 2008 debacle, that you need to fund the small businesses, since they're the ones that are going to have the bigger liquidity concerns, even bigger than the GMs out there. And they are also the biggest provider of non-government employees, that they need to provide some kind of government-backed loan operation to allow them to survive this unprecedented disruption of the global economy. And I think what compounds it is also the fact that it's not simply the US or Europe or US and Europe. It's a worldwide halt to economic activity and consumerism. And that's going to it's never happened before. So we really don't know where it's going to go. And more importantly, I think, but the key to think is, once we know the life cycle of the virus, we can stop having some prognostications of what the turnaround time is. Right now, nobody knows.
Yeah. Yeah, it's really a unique time. I don't think that, at least in my history, I certainly haven't seen it. So for a local business, they're gonna see, potential drop in foot traffic that's gonna massively affect sales, even supply chain disruption, things like what you're talking about, where they can't get a particular part, so they can't continue on with the product. But talk about an upside. There might be a business like, I'll jokingly say the toilet paper industry is probably doing well, right?
Yes, there are certain businesses that are doing well as the panic sets in. If you're a food supplier or a grocery store, you're getting a boost. As long as you can get product, it's going to be moved. Again, I think in that case, you're going to see short upticks in those particular businesses. That'll level out, and then maybe some back end. They may be the opposite of the Apple. People have stocked up their basements with the 400 cans of baked beans. That supply for buying baked beans maybe have next year's worth of baked beans purchases may have already occurred. So that, while positive in the short term, I think is really going to have a negative impact in the longer term until that supply gets eaten away.
Makes sense. So kind of, this is a big shot to the market here. And what do you think as far as, from a long-term perspective, how long is this going to last? Is this going to push us into, are we officially in a bear market? I mean, what's your take on it, on the condition right now?
Well, we are officially in a bear market. It's down 20% from the high, which we hit last week. Whether or not we go into a global recession, the consensus is, and I think rightfully so, that we will be in a recession, at least for a couple of quarters, obviously, until the supply chains get rectified, until people start spending again. So yes, we will probably be in a global recession. How long and how bad, again, don't know, because we don't know the true extent of the coronavirus. Will there be reinfection rates? Will there be, what the actual numbers are? So there's no way to assess that risk. But regardless, at some point, it's going to work its way through. And once we have the numbers, we can then say, okay, this is the timeline. But what's the realistic probability of what's going to happen once those risks are known? High probability that we're going to see, we'll come out of the recession as we always do. Probably not roaring, because I think it's going to be a bit of a time as we rearrange some of those global supply chains. Also, the fact, I think the consumer may have been spooked enough to slow down their rampant spending, because they're going to have been put under some pressure. So I think we will go back to a growth model, but a significantly less pace. The good thing is, everyone's been talking about for a long period of time that the market needed to correct. We're in the longest bull market in the U.S. stock market. Well, we've got our bear market, not for reasons we thought we would see, but at least it gives people the opportunity to rebalance their portfolios based on their true risk, personal risk profiles. I think a lot of people, when you get bull markets like this, may have been over risked because they didn't think there was risk in the market. It's painful, but it happens. This isn't the first time we've been in a bear market. It won't be the last. It's the first time we've seen it from a virus, but who knows what the next one will be, but we're going to get them. It's a chance right now. I think the biggest thing, and hopefully people haven't done this, is that the things you don't want to do is panic. You don't want to panic and lock yourself into the bottom of the market. And then because the way, regardless of what the inception is, when these bear markets occur, they tend to happen relatively quick. Normally not as quick as what we saw, but they tend to drop down relatively quick and then slowly inch their way back up. So people that panic and get out at the bottom, they normally miss a lot of the recovery because it's much more drawn out. So I think it's really important that people, once they have immediate needs met, they sit down, make sure they've not over-risked themselves, make sure they've got a plan in place to not put themselves in this situation again, because we will see it again.
All right, so let me ask you this. Let's say I had a ton of money on the sidelines. And say, of course, like I heard you earlier, and I need to, cash is king. It always is, but probably more so now than ever. Would I want to put a bunch of money in the market, a bunch of cash? Is that something that, is it time to buy, I guess?
No. And I'll tell you why. Normally, even when you go through a bear market, you have a good understanding of what the cause is, what the longevity of that downward pressure is, and when the light is at the end of the tunnel. Right now, the coronavirus is a risk that cannot be quantified. And because of that, you don't want to be putting money into the markets when you don't know what the risk of downside is. In our opinion, I think you'd be much better served, but even if you give up a little bit of the upside, a couple of points on the upside, it's better to wait till you have the actual understanding of what the risks are than to risk further deterioration in your portfolio by pushing cash into the market before it is prudent, when you know what the risks really are. Again, this is a unique opportunity. Normally we have an idea what, 2008, is as bad as it was, we knew what caused it. We knew what had to happen before the markets were going to recover, and we knew what sectors to buy and what sectors not to buy. Here, this is a global economy that's being affected right now uniformly, and until we have information to be able to differentiate where you want to put your money, I think you're better served sitting on the sidelines. If you're already invested, don't get out of the market, because most of the downsides occurred, but don't be piling into the market yet.
Gotcha.
And Philip, I wanted to interject just a little bit of thought process to that as far as understanding financial planning and taking the opportune times. Really, right now, where we're at with our clients personally, but where everyone needs to be, is just discussing and having open conversations with their advisors, with their CPAs, of course, by all means, to make sure that they're running in the right business manners and mitigating a lot of the downside potentials. But just being active with an advisory team that's able to give you the full knowledge and the understanding, and that's a lot of what we bring to the table in a business spectrum, and also on an individual basis. But to understand your goals, your thoughts, your processes, understanding exactly what you're trying to do with the investment structures that you have in place are going to lead for a good a good kickoff campaign as we move forward into navigating, what the financial futures hold. And that's just the opportune time to take the few moments out to speak with somebody that's going to help you greatly present those situations for you and understand what to do and where to move next.
Gotcha. Yeah, it makes a lot of sense. Let's talk about from a standpoint of a historical outbreak data. I don't know all of them. I can't name all of them specifically, but we have had other types of infectious diseases or whatever that have come across. Seem like the when it was first coming out, I saw a few memes talking about it was only on election years, but you know, I'm sure it's gotten a little more serious now. But let's talk about these past epidemics and how they affected the market. Somebody weigh in on that for me.
As you can see by the numbers up there, historically, these epidemics have little, if any, long-term effect on the market. I think that's going to be the case here, but I think these numbers are a little bit misleading because we have not had a situation where we've seen total global shutdown of both consumerism and production, or almost or close to complete shutdown. So I think this might be the first time we see a little bit more pain, but I think the outcome is still there. It just might take a little bit longer than 12 months for us to be net positive. It tends to happen in all of these cases. They tend to be a little bit more localized. They tend to be a little bit, you can go through each one of them. I think the one that's the closest correlation to what we're seeing, unfortunately, isn't up here because they didn't track things back then, was probably the, I don't see the Spanish flu up here, which was really one of the few worldwide endemics that we actually went through that had longer term effects on the market. So yes, epidemics tend not to have long lasting effects. This one won't as well, but it's going to be a little bit longer than I think a year before we're back running it on all cylinders.
Got you. So if I'm reading this correctly, it looks like HIV/AIDS had a kind of a long term, or do you think that was something else in the market that happened there in the 80s, early 80s, that caused that reduction after 12 months?
I think it was something other than HIV because that again was that hit a very small population of the society. It really wasn't getting in the way of, closing down either supply chains or kind of sheltering in place that we're experiencing right now. I mean, it was very localized to specific communities, and it was not a risk that everyone in the population was faced with, similar to most of the other ones on there, which were, SARS is probably and MERS are the ones that are very similar viruses. So you could use those as kind of better indicators of what should happen. And except that I think the time period may be a little bit longer because we don't know this to be true, but it looks like the infection and fatality rates are a little bit higher in the COVID-19 virus than both of those, even though both SARS and MERS are the same classification of virus as COVID-19.
Yeah, and we've been on the longest bull market. I'm
Yes.
sure would have some effect in the overall thing. But again, I think I don't know if it's the media or what, but it seems like this is definitely, I mean, 2016 wasn't that long ago. The Zika virus came out, and I really, I'll be honest, I didn't pay a lot of attention to it, and the people I talked to didn't. So this is definitely different in it, and I can see that it's obviously affecting the market too because everyone knows about the coronavirus.
Yeah, and that's really the differentiating factor. Zika is a good example where a virus that was targeted primarily to pregnant women. It didn't really affect the rest of society, and it was not significantly endemic here in the United States. And I think that's the major difference between what we're seeing now and why we're getting the response that we're getting from governments is because it's beyond epidemic. It's really a pandemic. And it has much higher contagion rates, more along the lines of the annual flu, even higher than that potentially. So what happens is it's having much greater impact than any of the viruses that are on the screen right now.
Yeah. Well, I don't know if y'all want to weigh in on anything else. I'd like to maybe kind of transition into how do we stay healthy financially through this type of pandemic? How are we going to stay healthy? What are some things that we're talking about, knowing our pulse and kind of knowing, where we are. If you're going to know where you need to go, first you maybe need to establish a baseline. Talk to me about that, and what are some smart things to do in order to be prepared for, the unknown that's to come.
Yeah, Philip, I'll weigh in on that one. This is Brandon. But working with individual clients and making sure that we know their pulse and understanding where they're moving in their personal assets and taking the necessary precautions is very intricate in how we do our business. But we also work very closely with business owners, and I myself, have quite a bit of consulting abilities in that area. But I think right now, understanding the potential impact on your business is one of the key topics that needs to be discussed and thoroughly walked through on a daily basis. I think there needs to be, the power hours over lunch, whether it's on the webinar, because everyone's having to take time off and work from home. But understanding, what the impacts are and being more active rather than reactive, right? We want to be on the cusp of this thing just as much as financial advisors. We want the most opportune time to invest. Right now is the time to be in the foxhole and understand where's the next move so that I don't get blown out of this foxhole.
Gotcha.
And I think those come with knowing your market, knowing your demographic, and brainstorming, really stepping outside of the box to start putting those pieces together, looking for ways to minimize your revenue losses, right? So can we mitigate some of those revenue losses, maybe lessen hours, right? We don't want to hurt our employees. We definitely want to keep them open in conversation, but understanding how to operate in such a pandemic time, right, where we really don't know what the future holds and we really don't know the next step to take, but we can start being active in those manners. Maybe we slow down production just a little bit. Maybe we change our demographics. Maybe we start marketing to a different opportunity that never presented itself before. Never want to tell someone to completely halt everything and stop. But right now is the chance to really explore the opportunities that are in front of you through your business.
Look for alternative ways to maintain some sales, i.e. maybe the internet, increase that marketing ability so you get to people that are in their homes that are still want access to your products. Assess and develop contingency staff plans for your staff. What happens if my staff gets sick? Do I send them home now? Do I not send them home now? Is there things they can do from home to help, again, keep cash flow coming in? It's all of this information and pre-planning. Again, it's somewhat difficult because we don't know what's really happening, and review as often as possible. The situation is still in flux, and it's going to be in flux at least for the next several weeks until we get a better handle on what the life cycle of coronavirus is.
Right. I think keeping the line of communication is vital at this point. Working with staff, especially employees, hourly employees, they have a lot of fear because they need that paycheck. They need that opportunity to continue to drive home income to feed their families and provide. So making sure that we're communicating from the top down and having those open discussions, like I said, whether it's webinar, whatever the safest means are, and we definitely want to take heed and advice in the social distancing, especially in the workplace, because we are around each other for many hours out of the day, and we don't know when we're contagious or not with this thing. And that's really the pandemic portion of it, is that we can't judge where it hits next. But being very open and communicative with your employees and your staff and your hierarchy to say what are the next moves and demographics, what's the potential impacts on the table. This is really the brainstorming time, and as financial professionals and advisors sitting in this office and across the Southeast, we're brainstorming where do we help each one of our individual clients with their unique needs, right? No shoes size fits one. Or all. So we have to be very unique in each one's planning, but this is where the business owner really needs to come back to it and understand how to help their employees. Finding aid, right? There are going to be some provision areas put out by the government very soon. We see in the near future, but you've spent that money training and developing all your staff, all your employees. There's not an opportune time to take and just throw that all in the garbage and have to start over. We need to make sure that we're keeping the workforce alive in some capacity And that is really through stepping outside of the box and thinking out how do we do that. The other benefit is to find wellness plans, right? To start promoting healthier habits, right? Maybe we are making sure that we're having a topic or a talk discussion about healthy eating and a lot of fluids and, you know, vitamin intakes and things like that. We don't want to be doctors to the business, but we all know how to be a little bit better in our personal lives.
Yeah, that's right. Especially with this, you know, it seems to be impacting, you know, people that are compromised and, you know, worse, of course, like, yeah, like all illnesses, you know, they're going to affect you. That makes a lot of sense to really take care of your, you know, your staff. And the cost of training is amazing, is, you know, so expensive. So you may want to, I've heard of companies that are slowing down their, you know, asking people to work, you know, 30 hours instead of 40. That way, you know, they can hold on to the full team, which makes a lot of sense.
Right.
Yeah, that's yeah, a tough time. Let's talk about just from a standpoint of, you know, the ever-changing risks that are out there. You know, this is something that, you know, we could have another one show up. We will have another one show up. I mean, this is, you know, historically, you know, we can go all the way back, you know, to all kind of diseases that just have swept the nation, the country, the world. And, you know, how do we, from a financial standpoint, how do we keep ourselves in a position of, you know, I think about, you know, conversations that we've had and, you know, having multiple sources of revenue so that you don't pull from a, you know, an asset in a, you know, that's in the market. You know, tell me some strategies on that.
I can give you an example, going back to one of the business clients that Craig had mentioned before, is what we did was, by having different pots of money available and the ability to access those different pots, some of which are unaffected by the market volatility, allowed them basically to draw down some needed capital without drawing down at the bottom, which is really the death of investment portfolios. Is when you take money out at the bottom, it has a multiplicative effect on the negativity that is happening on that pool of money. So when we work with business owners, when we work with individuals, one of the things we're always looking for is to have pools of money that react differently at the same time. And that's a huge protector, because what happens is when you're taking in, accessing capital in a portfolio that is totally unaffected by market moves, it really allows you to be able to replace it without having to accelerate the negative effects of the market. I'm talking generalities because there's a million different ways that can happen, and it's really determined by cash flow requirements, liquidity needs, risk profiles of each of the individual business owners. One of the things that we harp on, and Philip, you've been the recipient of this from us before, is we realize that business owners, your business is your biggest investment. And one of the things we're always telling business owners is you've got to have other pools of assets, because when these inevitable body blows come up, you have to have areas that you can pull capital from to meet those liquidity needs.
Yeah, I had a guy tell me that. I shared that with you guys. I had a guy share that with me a long time ago. If I had extra capital, where would I put it? And it's funny. Then, you know, he was saying that I should put it right back into my business. And, you know, really, that's, you know, a good thing. Maybe you're getting a great return on your business or whatever, but you also need to think about having another alternative source, because, you know, I would suspect that, you know, this, again, just total speculation about habits. This may have a long-term effect about as far as people's mindset, even well after this, where people are going to, you know, maybe not want to be in large crowds. You know, that type of industries that, you know, venues where large crowds are. I bet for a long time people are going to have this in the back of their mind, and they could be hit and hurt for a long time. And if they don't have alternative, you know, avenues for revenue, that could be, you know, a death blow.
I agree with you there. I think that's one of the reasons, is regardless of what you do, especially business owners, you don't want to have all your eggs in one basket. It's kind of like being in the old days, you know, being the typewriter manufacturer, and you have all your money in the typewriter manufacturing business, and the PC comes along. You never know what it's going to be.
That's right. And that's kind of it with health, or yeah, in just in general, we need to always be ready. So anything else that you guys want to, add to this conversation? Things that you're hearing from your clients that you say, that, I know you guys are probably like everyone else, this is a hot topic. You can't have a conversation with it without talking about, the effects of this. What are some questions that you guys are being asked?
Well, you kind of hit on the one that we get, and I guess it might just be the fact that we've been harping on our clients for a long period of time, but I'm getting phone call is this the time to put more money back in the markets? And I think that's a good mentality to have, that they realize that these downturns are not ongoing, and that at some point this market's going to level off and then go in the other direction. The other thing is, what can we do? Should we be pulling those liquidity cash flows from? And again, the clients that we have been prepared for this. Again, not for this particular instance, but because of that diversification of risks and levels of liquidity, we're telling them where best to pull those cash flows from to help as best as possible them meet their liquidity needs. I mean, right now, I think that is the number one risk of everyone, regardless if you're a business owner or not, is how do I survive the next 60 or 90 days until we get a better understanding what the long-term ramifications of this virus actually are. So it's kind of a unique time to be talking, because we don't have all the answers. I mean, I don't think we ever have all the answers, but normally we at least have some prognostications of timelines, risk factors, and normally we're saying this is a good opportunity to reallocate assets, because we know when we have these bear markets, normally everything goes down, and the only thing that goes up are treasuries, and it gives you a great opportunity to reallocate your assets. Well, there are some opportunities now. It is rather limited because we don't know what the risk factors are. We will shortly. I'd say 30 days probably max before we've got a pretty good understanding of what this life cycle of this virus is, and then we can start making those reallocation decisions, and maybe then even putting in some more money into the markets.
Yeah. Even, I was watching gold be sold off, and to me, I just can't, I can't make I can't understand how that could happen, why that would happen in this market.
You would expect that gold would, and this is what the normal business, MBA, when in times of stress, basically gold is a good holder of value, and that is true. However, during the initial parts of any kind of bear market, liquidity is king, and everything correlates to one except for treasuries. So basically, they sell whatever has a bid, regardless of whether it's a good store of value or not. So that's why gold is selling off right now, is because they're selling whatever they can to meet liquidity requirements. Once that initial panic has settled in, I think you'll start to see gold hold its traditional value as a volatility mitigator. But that's not uncommon. If you look at the beginnings of almost every bear market, everything that you can sell sells off, and then those diversification components that we in the financial industry are always talking about start to get back into normal. Right now, we're in that unnormal phase of the markets where everything goes down except risk-free assets. And even there's some issues. We can have a conversation with someone who wants to hear about what's going on there. That's more of just there's so much volatility that even some of the liquid assets, are having some additional risks put into them. That'll all play itself out. It's normal, and that should settle out over the next couple of weeks to a month.
Yeah, gotcha. Yeah, I guess they're putting some powder. They're getting dry powder is what's going on there. They're just getting plenty of dry powder.
Yeah. Yes. Or
Great.
paying for ongoing needs that they need, or the leverage part of the market where probably most people that we're talking to now are not involved, but that have significantly levered businesses, and they need cash to continue to operate.
Yeah. Well, good. Well, like I always think about, that where I see most people fail is in their execution, and really knowing what to do next is always a topic that I bring up, because we gain this knowledge, but really what what good is knowledge if we don't use it? And I got you guys on board here, and ultimately, we don't want to bury our head in the sand. We want to put ourselves in a position to be able to, how can you protect your money right now? What are the things that we need to do? And we're seeing, all the implications to the coronavirus, but, I guess I always say the best defense is a great offense. To proactively plan is always, kind of my mantra. So I know you guys have talked you into giving a free consultation. Talk to me about what you guys would offer people, at this time. I'm sure you're busy already, so lay that out how you could help somebody on this webinar.
Yeah, Philip, I'll throw in on that one. So the opportunity lies that, we're here to help. We want to educate first and foremost. We want to reach as many people that desire to understand what's going on, what are the next steps to take. So meeting with your personal advisor that you work with is a great opportunity. I'm never going to take away from that, nor is the team here at AHF. You will always want to be very active in this situation, as I mentioned earlier. So having the relationship and that trusting guide to work with is a great opportunity. I think that the opportunities that we present is we are going to be of resource to you in many different ways, not being a proprietary company or working with an individual planning firm, but the opportunity lies that we want to know the client, what their thoughts are, what their processes are, where do they stand and where do they want to be, and what's the timeline on investments or whatever they're trying to achieve. Is it retirement planning? And the opportunity lies that we're here to take the second look at it and bring a case design team of 7 certified financial planners and 2 attorneys on staff to your planning to help you understand better what's working for you, what's not, and then improvise and make some strategy suggestions that can really benefit and make great efficient moves in what you're trying to do for the future.
What we also will do is we're very versed in working with business owners and realizing that the business is usually the biggest asset that a business owner has. So one, getting an understanding of the value of that business, getting an understanding of cash flows within that business, and also the goals of the business owner. Growth rates, where their personal assets merge with the business owner, with the business asset, and how to build that 3-legged stool that we kind of alluded to. Liquidity, do you have the right number of liquidity in your personal or business? Do you have the right diversification of assets? What tends to happen is people normally will invest either everything into their business when they then have a concentrated risk in the business, or if they do outside investing, it tends to be rather localized, and there's again risks in that. So here's we basically say, here's where you are today. Here's the path that you're currently on, and here's some holes that we think you should consider patching up to give you a better risk return profile. And it's a little, Wall Street jargon, but what it really means is that you're getting paid for the risks that you're taking. And often business owners don't even know some of the risks that they're taking. And that's really what we try to do.
And that's a free thing, so it's normally some value. What's the value in what you guys are talking about? Y'all have done this for me, so I know the value, but you guys are normally charging $1,500.
Normally we'll charge, if just going to come in and do a valuation of what you currently have and lay out your path, it's normally between $1,500 to $3,000, and that's about industry average of where we come in and we lay out, here's where you are and here's the path that you're on.
But for my friends, you're going to hook them up, no charge, right?
No charge. No
Coronavirus
charge.
Special.
Coronavirus special.
Glimmer.
We just realize that there's a significant need for it out there. That has been for a while. This may be the impetus that gets people to kind of focus on it, because they realize the harm that can happen when you don't have one, and we know that that it'll definitely be worth the the 30 minutes to see if we can help you, and then the couple of hours you probably need to spend to get it done.
Hey, Philip, I'll cut back to just one more detail of consultation, and it has become very apparent in the needs of my business clients that I have, business owners across the board, that they have individual employees that are very worried about the pandemic. They're very worried about the coronavirus. Do I catch it? Do I not? How do I safe space myself? So they've got plenty of worries. And the last thing that they need is the financial worries of their future, right? So a lot of my business clients are asking me to come in and present webinars to the employee body, right? So we set it up, you know, at a downtime during a lunch hour or in a weekend hour, and present to them, you know, in a webinar similar to what we're doing today, but just giving them a little bit of comfort in the education pieces throughout the body of the employees to kind of put their mind at a little bit of peace in their personal financial world. So I don't ever want to step away from all the resources that we bring to the table, which are many more than we can talk about today. But being able to, you know, take a little bit of that fear and actually turn it to a little bit of a positive stance with our employee bodies and just being of service to them, that really shows great stature in the production of employees and what their hopes are and how important it is to work for a company that is providing such a great benefit. And we come on as the, you know, the third-party administrator in many ways to just offer those educational pieces and just be there of resource if they have any questions or concerns.
Gotcha. Yeah, that makes a lot of sense. So let's do this. Let's open up questions and see. I'm sure some people have a few questions that they, you know, maybe specifics, maybe things that, you know, or, you know, a lot of this is going to be very, you know, case specific to the individual, but let's see if there's some questions out there. Christy, do we have any questions?
Yeah, we had a few come in. Is my cash in the bank safe?
Yes, I'll preface it. Yes to $250,000, which is, the banks themselves are actually significantly more better capitalized than they were in 2008. So the risks of the banking system that occurred back then is not relevant now due to the changes on the capital requirements that banks, the amount of money the banks are required to keep. But in addition to that, what we tell every one of our clients is don't put more than the $250,000 in any bank unless it's absolutely necessary, simply because then you double the belts and suspenders methodology. Then if something were to happen to the bank, you have the SIPC insurance on top of it, the FDIC insurance on top of it.
Makes a lot of sense. And anything else, Christy?
Yes. So we had another one come in. How can we help local businesses? Will buying gift cards from local businesses help them?
Yeah, absolutely. The restaurant businesses, you know, the local walk-in shops, whether it's a coffee shop or the, you know, even the oil changing shops, there's going to be a lot of decrease in business foot traffic coming in and out of those businesses. So preparing in the right manners, we all need their services. Take, for instance, the oil changing shop, right? Go ahead and buy your next oil change and keep them alive today, but go ahead and pay for the next one that's coming up in 2 to 3 months. You got to do it. It's on the books, right? Just go ahead and set it and forget it kind of deal. But, you know, buy the gift cards for restaurant use. Just find the opportunities to keep supporting locally, right? McDonald's and all the other companies and the bigger corporates are going to be there, and I'm not picking on any of those individually. They're going to have the opportunity to stay alive and well because they have the capital and the corporate structures behind them. The local businesses at this time, though, are the ones that are really hurting. The government realizes it. They're setting up and implementing tools to be able to benefit. But more than anything, as a local body, we really need to support our community and support one another in all of those capacities. So start thinking a little bit ahead of time to say, what do I need? Maybe I do want a nice meal that I would have enjoyed with my wife at the restaurant this month, but maybe I just get it to go and pick it up curbside. Keep those guys in mind and keep them moving forward.
Yeah, that makes a lot of sense. Anything else, Christy?
Yeah, we had another one come in. Are financial institutions offering coronavirus assistance?
I don't really understand the question. Sorry, I don't.
Let me frame it. Maybe I can help with it because I've heard this from some people. Like, for instance, let's talk about it on several different levels about the, and again, there's a lot of this is in flux and I don't keep up with it like you guys, but it seems as though there's going to be some money that hits the market from the government. There's going to be some of these plans, and I guess, yeah, like if say I owned a business and I needed some cash to keep running, can I get a loan? You know,
Right now, that's what's under discussion, and I think it's going to get passed today, if I'm not mistaken. That it's on the president's desk, but they're talking about basically using, I guess, the SBA, and providing a lot of capital for small businesses, where the government will basically guarantee some or all of that loan, and then make it very attractive for, obviously, for the banks to then lend that money out to the small business community. So if that was a question, yes, they are working on that. And I think we're almost definitely going to see a lot of positives in that arena, because 2008 did teach the government, which I didn't think was a possibility, but did teach them that the small business owner is really the engine that drives our commerce.
yeah. What about like another question that I'll jump in here on that I was thinking you may could shed some light on is, as it relates to revenue, do you feel like for employees, say everybody went to a 30-hour work week to help, you think that's going to come through with the employees being able to get a particular check or, some type of money? You think they're going to, are they going to do that, or is that still in talks?
That's my understanding. That's still in talks. They're pushing for it to pass. There are a couple of Senate Republicans that are obviously very cost conscious, and they've been the sticking point for the last couple of days on that. I think eventually it'll pass, and that's why Mulvaney was there yesterday, was just telling them the repercussions if they don't really let there be some significant assistance to the day wagers, basically people that are in roles that they need the daily income.
Yeah. Okay.
We had another one come in.
Okay.
Do you have any suggestions for a privately owned pediatric clinic for staffing when volume is currently low to help with overhead, but still ensure staff is paid?
That one I'd have to think on. I've again, not my area of expertise on the medical profession, but my understanding is that they are, reaching out to a lot of retired both nurses and doctors to come in and make up some of the lack of medical personnel that's needed. And I'm assuming, and probably rightfully so, that they would, because it really is charity on their end, that they would be a much more economical way to increase staffing, because right now you can't increase staffing because there aren't the staff to do the job. So I think on a per
I think
hour
that's
basis,
different, Ed. I think she's asking the question that with a pediatric clinic, I think that the volume's going to be low, and she's trying to figure out how to keep everybody employed and pay them.
Right. So, and Ed was going in the right direction as far as like how is the governmental bodies and how are the hospitals and all the clinics and everything that they're having to put in place to take care of the virus or treat the ill, that we're going to see an influx of need of staff in those areas, and we are struggling very well in that. That was where he was going with that answer. But to answer that, really digging deep into the pediatric book, maybe we are staffing people to utilize phone services, right? So you see a lot of opportunities that these companies are opening up, phone-a-doc type services, right? So maybe some of the staffing there, maybe some of the pediatric nurses in that particular institute, maybe that's the way that we start thinking out of the box, is that we utilize resources that probably weren't present when everything was hunky-dory and doing well. Now we're looking for where can we reach out, and I think most of it lies in how do we impact and how do we effectively help our clients that are on the books. How do we nurture to the community, especially in the pediatric care situations. And maybe it is staffing people to call on and help, or do house calls become apparent, right? Most people don't want to come sit in a waiting room, want to deal with a public situation in a hospital setting. So maybe we do start looking at how do we service our clients, and maybe it's wellness checkups, maybe it's health fair, maybe it's webinars. I don't know how the cash generation can be put into place on that, but there's ways to start thinking, and that's one of the things that we bring to the table as far as being of consulting, is just helping you to kind of see opportunities that could present themselves in a good manner.
Yeah, that makes sense. Yeah, try to drive the demand and do, people whose kid they might would bring them, but because of this is all going on, they don't want to get them out and exposed, and yeah, do that, and then maybe even get the team together and discuss, kind of everybody taking a little bit of a hit, and hopefully the government will kick in here before long, and give everybody a little money to offset some 30-hour a week kind of things.
Right.
Yeah, that I could see that.
Yeah, and so like I said, they're very specific in making house calls, could possibly present some revenue generation there, but also, as we mentioned before, where we're coming in and doing webinars to, check the financial health and wealth of the employee bodies, maybe the wellness programs to come in and just do a routine check, or give, an office complex of 20 or 30 people, even if it's done on a webinar, say, here are the vital signs that we're seeing, and here are the things that we need to be looking at, and just kind of giving them roadmaps, right? And maybe that fee comes with, a lunch set up for everyone. If it is in an office setting, don't really need to be in that gathering at this point. But being able to offer a live situation, and maybe there is a little bit of a fee associated, but there are many opportunities that lie in helping, but focusing on the community and how we can help each other are going to lead to the opportunities to generate some revenue that wouldn't typically be there.
And I think that going, the house call may be the solution set to drive some revenue very short term, because the kids still need the coverage. They're just afraid to come in and do it in the office. Maybe it's going to be not as profitable, but it may be the lifeline that keeps the clinic alive if you're out there proactively looking to go and visit patients, and might even pick up some long-term patients as a result.
Yeah, sounds good.
Yeah, and they responded back with, "Thank you so much. That information was helpful."
Good.
Okay, one last question. Is the coronavirus crash worse than the 2008 financial crisis?
Well, we don't know the answer to that yet, because we don't know the severity of it. And what I mean by that is, the initial downturn has not gotten to the point of where 2008 was from, peak to trial. That may or may not happen, but that's not really the indication of whether it was worse or not. It really is the long-term effects. We don't know that yet. I doubt it's going to be, because what happened in 2008 was a structural issue with the economics of our country. This was simply an exogenous shock, and the underlying financial institutions that were so badly shaken in 2008 are in much better shape now, and I think the economy will come back. There's not going to be billions and billions of dollars of bad debt that needs to be written off. Houses that were ridiculously overpaid for. All of that takes a long time to digest and recuperate from. We're not going to be in that situation unless we get multiple reinfection rates with the coronavirus, and this trends on for a year or two. What I think will happen is we'll some point in the next several months, we'll have an indication of what the life cycle of the coronavirus is. We'll start to pick up the pieces and move forward. But the fundamental underpinnings of the economy are in a lot better shape than they were in 2008.
Good stuff. Well, it is now near the bottom of the hour here, and we like to try to keep these usually 45 to no more than 60 minutes. We appreciate Craig, Edward, and Brandon. You guys are the best, and thank you so much for shedding some light and really, hopefully, knowledge is power, and kind of easing some fears. People are scared right now, and there's nothing worse than knowing you lost 30% of your portfolio the last 2 months or something. That's not a good feeling. So really want to thank you guys for helping our business owners get a peace of mind. It sounds, in the bigger scheme, it's going to be scary for a minute, but like everything else, this too shall pass is our hope and sentiment here, I guess.
Well, Philip, thank you very much for allowing us the opportunity to hopefully pass on some wisdom to your clients and anybody else that's on the webinar. And we're very grateful to do it. And thank you for being so gracious a host.
Yeah, and like I say, if you guys have any questions or anything that you would like to pass on, or any additional ideas you want to connect with these guys, just send an email to events@askbis.com, and we'll get you guys connected straight up. Total transparency here. I use these guys, and I am extremely impressed in the things that they have done for me, and in the overall package of what I'm trying to do with my life and my, really my legacy. And so I give them, high marks. And I think that no one would be, if they took advantage of a free consultation, no one here would be thinking that time was wasted. So if you've got questions or anything, hit events@askbis. And thank you, Christy, and your team for helping put all this on. And hope it was fruitful for everybody. And let's hang together, stay safe. No handshaking. We'll be doing elbow bumping for a little while, but we're going to keep moving. Y'all have a great day, and we'll talk to you soon.
Thank you.
All right.
Thank you. Stay safe,
Thanks,
everyone.
guys. All right.